Information to help you run your business better and improve your marketing campaigns. My name is Hank Hoffmeier, and thank you for joining me on Hank's Marketing and Business Tips. Welcome to episode 240 of the Hmbt podcast. Today, we're going to talk about taxes. And you're probably saying, taxes? Tax season just passed. Well, if you're a business owner or an entrepreneur, you need to think about business and taxes all the time. Today, I'm joined by Wendy Cassera. She's the owner of Taxpectations. Wonderful name. I love it. Thank you for joining us today, Wendy.
Thank you for having me.
So I think, you and I had a discussion before we got on air today, and there's so many different things we can cover. And I think there's so much information, but people see taxes and they probably already tuned out. Some people probably already turned off this podcast and just said, taxes are boring. I hand my receipts over to my accountant and things just get done. But if you're still here listening to us, we have some great information for you today. And we're going to save the best for last, which are the myths, right? You probably things you've heard that you need to do or don't do, but maybe they're not true. But first, the most important thing with any business is planning and having goals. When it comes to taxes or doing your taxes, even personally, if you're working for a marketing company or you're a professional, you still have to do your taxes personally. But if you're in business, you have to do business taxes. In regards to both, I think what we're going to talk about today, some of it's relevant for both. But first, let's dive into planning and preparing, which is not something you do around April 3rd or 5th, right? You want to be doing this year round. So what are some things that you can recommend to help people make sure that they're prepared for when tax season comes around?
I think what you just said was the most important. Don't wait until April 3rd. You'll make yourself crazy. You'll make your tax person crazy. Everybody gets crazy and it increases the stress. So yeah, doing it year round, set aside a time. I recommend my clients Money Monday. When you're in Monday morning, when you're getting ready to prepare your week, your schedule for the week, throw in a little time there to plan your week, plan your money, plan your taxes. When it comes to taxes, there are lots of different kinds. There's the W-2 employee, and then there's us, the small business owners. And there are so many things that you can do, so many deductions that you can take. And, statistics, the IRS gets between $1 and $1.5 billion every year from deductions that small business owners don't take that they are qualified for. They get to keep your money, so let's not give it to them.
So and that's that why phrase, I got into leaving money on the table, right?
Yeah. A lot of people leave a lot of money on the table. So keep in mind, most everything that you spend out of pocket is tax deductible, and that's most everything. So always keep your receipts. And I recommend to people to create an email that is just for your bookkeeping and accounting. So when you go to Staples, you can have them send an email there. When you go get your office supplies, when you go get your gas, when you go get whatever it is, send all the emails to one email, and that way you have it all in one place, and you don't have to keep each paper receipt. Take a picture of it and email it off. Or there's a lot of good softwares out there, but keep track of your mileage. Very underused. There's a ton of mileage apps. When you leave your house to go to the post office, go get your office supplies, whatever it is, count the miles. It adds up. 55.5 cents a mile for a tax deduction is more than you can possibly spend putting gas in your car. I'm out here in California, and it's still more than I'm spending, and it's one of the highest states in the land for gas. Right. So keep track of your mileage.
Going back to the receipts that you mentioned, I have a Gmail address that I use to collect receipts, and what I do is I forward it to that email address if it's a different one. Mm-hmm. And I don't know if anybody knows this, but with Gmail, or if you use Gmail for your business, you can add plus and something at the end of that email and it still gets through. So I add plus receipts to it. So I send it to blah, blah, blah at gmail.com. Blah, blah, blah plus receipts at gmail.com or whatever my business name is. And it goes in and I filter those and tag them as receipts, because with my LLC, I do some things that I want to take those receipts and write those off at the end of the year. I don't do a lot. So therefore I just forward it, and then maybe once a month or maybe once a quarter for me, because it's very minimal, I'll go in and just look for those tagged items. And then I put them into Wave apps, which, I use the free version, which allows me to put all my receipts in there. I use the app to send it there. And then it normally does a pretty good job of categorizing it and puts it into a P&L for me.
Right, right. And they have the new receipt scanners too. You can get a portable one you can stick in your vehicle. I recommend those to construction workers, contractors. That way you're putting your business cards, your receipts, your whatever it is that you're getting for people, you just put it through there. It sends it to an app and categorizes it all, and it can go to your go directly to your software, whatever software that is.
Right. You don't want to crumble it up, put it in your pocket and forget about it.
Yeah. And that's what happens a lot is people say, oh, well, I lost my receipt. I lost my gas receipt. I lost my whatever it is. So it allows you to keep your receipts without having to worry, where did you put it?
So what did you call that? I like to call it Motivation Monday, because you have to be motivated to do taxes, right?
Yes. Money Monday.
Money.
Money Monday. And I do a radio show I'll talk about a little bit later, but I'm going to start doing that. I'm going to add a segment to my radio show that's going to be Money Monday on how to organize your money, how to plan for taxes, making sure that you're spending money on things that you need to spend your money on, and where you can put the money, and how to get the most bang for your buck. It's so important.
How do we find this radio show of yours?
It's called Money and More, and there's a link on my Facebook page and my website, and it's all getting up. I had it for years, 5 years ago, and then I kind of stopped, and now that I'm getting into podcasting, I'm starting it back up again. So you'll find the tag. It's called Money and More.
We'll have links in the show notes, folks, so you can find that. Sounds like it's something, if you're a business owner or a wantrepreneur, you need to listen to that to get those tax tips. And I love the phrases you're coming up with, and giving us some ideas on making sure that you're planning. So we're talking about receipts. What else do we need to do to plan and prepare for taxes?
Well, depending upon what type of business, you talked about being an LLC. An LLC has a little bit different kind of deductions than an S corporation. And if you work with your family in your business a lot, like your wife and kids help you, then get in as an LLC and be taxed as an S corporation, because then you can take advantage of things like they call it the Holy Trinity in the tax world. And it's where your mother, father, sister, brother, wife, husband, or children can be paid to help you, and it's a tax deduction for you, and they don't have to claim it as income. It's not taxable on the other end. So it's a really great thing.
Did not know that.
Yeah, there's a lot of nuances that you can learn depending on the type of business that you are, and because we're service industry, as a tax preparer, service industry, we don't have as many deductions, so we have to take advantage of everything that we can while we can.
And I know I'm probably getting into the myths a little bit early here, or I just want to clarify something, because I had an argument with somebody over this, because they love to take people out to dinners and lunches and pay for them. I think they think that they can write off that whole amount, and they think they're getting back that whole amount. If you spend $100 on a meal, they think they're getting $100 back, and that's not true.
No.
How I would explain it, and you could tell me if I'm wrong, is what you're doing is you're able to take the total money you spend throughout the year, and that basically deducts from your income, and that's your taxable amount. Maybe I'm wrong there, because you could probably explain it a lot better.
Yeah, it gets kind of convoluted with all the language and all that, but yeah, basically, okay. So you made $100 this year, and you spent $75. Well, that 75, depending on what the deduction is, could be dollar for dollar. Okay, if you went and bought a new printer, then it's that dollar for dollar deduction. But taking your friends out to eat is only 50% deduction,
okay. And
that deduction only occurs after the alcohol. No writing off the margaritas.
Oh, wow. Okay.
Right. Alcohol. Yeah, I know. Sadness. So you have to be really careful. The IRS has a term called reasonable and customary. So if you made $100 this year and you write off $500 in parties, they're going to probably pretty assume that some of that was personal.
Don't they know
So
that alcohol closes business deals?
yes, they do. And do you think they care? No. I had somebody ask me earlier, well, I have to wear suits to work. I should be able to write off my suits. No, no. Very rare can you write off a uniform of any kind.
Really?
They're even scoffing at nurses now because people wear nursing uniforms out in public all the time, right?
Right.
So yeah, that's a fine line.
Wow.
They take away as much as they can.
So like regular clothes, like if I was a construction worker or a construction owner and I had to buy jeans or something, is that deductible? No. Wow.
No, no. Painters' whites are no longer deductible. I mean, like, there's really not a lot of uniforms. Yes. So
Right.
let's say that you are a policeman or a firefighter and you have to pay for your own uniform. And sadly enough, a lot of them do.
Right.
Then that's tax deductible.
And if I was to, for my company, make up branded shirts and buy those and give them away as gifts or sell them, that's more of a supply. I can write
Yeah,
that
that's
off, right?
advertising.
Yes.
That's an advertising. And that's dollar for dollar. So that's a good deduction. So pens, pencils, marketing, promoting stuff is usually dollar for dollar. Really good choice
Okay. So that raises an excellent question. If I buy a polo with my company name embroidered, is that a uniform or is that advertising?
that's advertising.
Okay.
You're wearing it because you want people to know who you are and say, ah, who are you? What's that logo? Yeah.
That's why it's so great to have somebody like Wendy on, because she knows this stuff. You don't have to guess it, and you don't have to go into TurboTax or H&R Block to try to figure that out on your own. You just talk to Wendy, and there you go.
Yeah, yeah. I mean, I love the fact that we have things like TurboTax and we have some of that. But the one thing that you have to be careful of as a business owner is because if you put in the word shirts, it thinks you're doing clothing, and so it will not allow the deduction.
Oh,
And a tax preparer is going to ask you, hopefully, or they should, I do, ask a lot more questions about what is it specifically that you're saying you spent it on.
awesome. Well, let's get into some myths. What are some myths that are out there, and let's talk about them.
Okay. So I'm going to tell you my favorite story of all time about my favorite myth. Okay. So April 16th, it'll be really short. April 16th, I get a call at 10:30 at night, and it's from a client of mine that's a doctor. Very good practice. He's been in practice for years. Just everything's wonderful. And he's whispering at me, and I'm asking, I can't figure out what he's saying, but he says, listen, he says, I closed my practice. I left my wife and kids. I've driven north. I'm in a hotel. I can't tell you where I'm at because I forgot to write a check yesterday to the IRS on April 15th, and I'm afraid they're going to arrest me. Okay.
Wow.
The IRS does not arrest you for not filing your taxes on time. Big myth number one.
But there's a scam going around about that. People try to extort money from people and say they're going to
Yeah,
send the IRS police after you.
all the time, all the time. He had literally fired all of his employees, sent out a mass mailing saying he was closing his practice. I mean, literally physically did that. And so no, the IRS are not going to come after you. You go to jail for perpetuating fraud on the IRS. Fraud literally means that you did something on purpose to avoid paying taxes. You went to court and you were found guilty. Okay.
Right.
So not paying taxes and not doing all that, you can't get arrested. Now, on the flip side, you don't pay your taxes, they can take money out of your bank account. They can lock up your bank account for 21 days. Even if they get all the money the first day, they can lock it up for 21 days. Always, here's another thing. I'm just going to say it. I'm going to probably get slapped for this. If you're having issues with taxes, always take care of your state issues before your federal issues. The state can do much more, and they're much more quick about it than the federal government is.
Makes
Not to
sense. I
say,
wouldn't have thought about that, but it makes sense to me.
it's a big thing. It's a big thing. The state will take your money out of your bank account faster than the IRS. Other myths are around the IRS, what they can and can't do for you. You can only go back 3 years. So if the IRS owes you money, they're not going to let you have money longer than that. But if you owe them money, you have to file. So if you owe them money, you have to file 5 years ago. But if they owe you money, you can only go back 3 years. And it's 3 years from the current filing year.
Okay.
So right now it'd be 2017, 18, and 19, right? Does that make sense?
It does.
So yeah. So there's I'm trying to think of a couple more good
Well,
juicy
I got
things to throw
a
in.
good question for you.
Okay.
Like some people use TurboTax or H&R Block, and you have the option to print out your taxes, or you can save a PDF of it. Is it all right to do either or? Should you do both?
I would recommend doing both because you need to save your tax return for at least 5 years. Okay. It used to be 7 years, and if you save it for longer, that's a good thing. But also know that as a business owner, you save your tax return, you save any tax documents, which are like W-2s and 1099s, hotel receipts, because if you don't have a printed receipt, they don't have to allow it because you can charge all kinds of things to a hotel receipt. But like your gas receipts and your food receipts and all that stuff, if it's on your bank statement, you don't have to keep that receipt anymore, as long as you have someplace showing you paid for it.
All right, I was going to ask you that question, like your bank statement or your credit card statement. Could you use that if you didn't have a receipt?
Yes, except hotels are one of the few things they won't let you. But yeah, keep your bank statements, keep your tax return, keep your W-2s, 1099s, and your hotel receipts. You can get rid of everything else. And you need to keep it at least 5 years. They can only audit going back 3 years, but if they find fraud or what they think is suspicious activity, they can go back another 2 years.
Interesting. Good to
Okay.
know.
And also here's myth number 4,568. There are no tax things that are red flags to the IRS. Like a person says, oh, well, I don't want to do a home office deduction. It's a red flag. There's no such thing. Okay, the IRS audits less than 0.5% of all personal tax returns, number one. So it's slim to nothing. And usually, oh, you get to hear the train.
I did.
I live by the train. Usually it's random and once in a while it's not, but there's some outside reason why you were chosen, not because of that you had a deduction. Most often, here's a very random IRS fact. The IRS has an algorithm on their computer, and it can tell the number of numbers that are on your tax return. So if you have too many zeros, they know you lied and made it up. If you have too many nines, they know what the average is per tax return for your name, age, demographic. And that's how they find cheaters. It has nothing to do with what you deducted.
Well, doesn't the software programs like round up anyway or down?
Yeah, they do. But like when you e-file, it still gets all the information.
Okay.
But if you have that you spent $450 on advertising and $200 on bookkeeping
not 229,
and
$300,
yeah. It knows what it should have, even with rounding.
Right.
It's an algorithm. It's very
That's
very
interesting.
Yeah. But yeah, don't not take a deduction because you're afraid it's going to send a red flag to the IRS. There is no such thing. I mean, other than what we said before, be reasonable. Don't have $1,000 worth of income and $1,000 worth of margaritas as a tax deduction. Not going to happen.
All right. So let's close out with another tip. I guess, what is the biggest tip that you would give anyone that's running a business when it comes to taxes? Besides, we already just said planning. What would be your next tip?
Make sure that you have the right entity, and that's LLC, S-Corp, C-Corp, whatever type it is, for what you're planning, where you're planning to go with your business.
Right.
And don't start at the top. It's easier to go up than it is to go down. But also, I encourage all of my people to contact me several times a year and say, this is what I've done so far. What do you think? Right. Get your tax planner involved in what you're doing to make sure that you're on the right path. And if your income is doubling, which it should, and I can help you with that because I talk about money, definitely make changes in how your plans are going. It's not the same for every tax bracket.
Do you have like a Twitter version of how to explain the differences between the different LLCs and stuff like that?
I don't have a very good Twitter version. It's really hard. LLC is good, but LLC is a state-based deduction. The IRS doesn't recognize an LLC, believe it or not. So it's the same as sole proprietor, and you're going to have to pay self-employment tax. So you're double taxed on LLCs.
Okay.
However, if you're not to the level of S corporation where you should be able to pay yourself, which you should be paying yourself first, just saying, an S corporation is going to help you save on self-employment tax.
Okay. And what would be the quote unquote threshold or requirements for that?
There's not really a requirement, but I tell people if you're going to make six figures or more, and especially if you have products along with your services, I would go with an S corporation for sure.
Okay.
I mean, and especially if you're thinking in the next 2 or 3 years you're going to grow your business, then I would go at the very least be taxed as an S corporation. And that's just my advice. Not a lawyer, can't give you
Right.
laws.
Well,
That whole disclaimer.
yeah, well, hopefully it's provoked some people, listening to look into that maybe. And it's something I would want to look at in the future because, I may grow down the road, but right now I do have a full-time job and I do some things here and there. And I just did the LLC just in case, but I don't really make a lot of money off the LLC. So right now I don't think S-Corp is right for me, but it might be down the road.
Yeah. Yeah.
Well, it was a pleasure having you on. I was hoping you could tell folks how to connect with you, find you, and throw some more myths at you maybe.
Awesome. Awesome. You can find me at my business is Taxpectations. TAX, P as in Paul, E, C as in cat, TATIONS, taxpectations.com. I have a Facebook page. I've got a web page. Go onto my web page and book a free 20-minute consultation anytime. I'll talk to you and give you a little bit of information. And if you need more, I love doing financial coaching, helping people through their money and more stuff, all their stuff, their financial stuff, and how to grow financially from where you are to where you want to be as easy as possible regarding your personality and what you're going to actually do, what you want to do.
Well, if you want to be financially successful, folks, you need to talk to Wendy. If you want to hear previous episodes, head over to hankhoffmeier.com/Alexa. You can listen on the website. You can catch me on iTunes, Google Play Store, on your Amazon, Alexa, or Echo, whatever you call it. Make sure to check out my YouTube channel. These recordings are definitely going up there now as video instead of audiograms. I'd appreciate a like and a subscribe over there. And I asked last time, what I want to do is find out if you're an iTunes listener, just drop me a hello, a yes, or whatever on whatever social platform or through email. Just say I listen on iTunes. I'm trying to figure out some things with the analytics over there that I'm having trouble with. So I'd appreciate that. And with that, folks, make sure you make this Monday Money Monday.